Hello and welcome back to the analysis of gold XAUUSD. My name is Vic. I'm the founder of Vikinsa Capital Management. Gold had a fantastic week. It made huge move to the upside and then it started to fall for a correction. And we can see that we had this W pattern here, and we have been able to capitalize on this particular move to the downside, and it is looking very good. This was one of the best trades for the entire week. So in this analysis video, let's look back, right? How we actually analyzed that, how we found this and how we executed that trade. There is a lot of educational content in there, right? There is a lot of learning in there, right? So please make sure that you watch the entire thing if you want to learn, right? How we actually analyze these markets, and then we'll move on to the next part, which is what we can expect next on gold, right? So stay tuned.
How do I take this as a confirmation for the trend? Because here now
It
this
is
is
not a
a
confirmation. No, it is not a confirmation. You're only reading what it is telling you, right? So look at this. Don't worry about this. Okay. Just read the price section for now. Okay. Don't worry about water or anything. Just read the price section. What's happening? The market went up, fell down,
Mhm.
went up, fell down, went up, right? So it's bullish. Nobody can
Yeah.
deny that, right? So it's bullish, right? Fine.
Oh,
Okay. But is there any chance that market can come down? How do you find early warnings or early indications that market can actually come out of this bull trend and fall down? That is a possibility, right? Okay, I'm not saying that that will happen or can happen. I mean, that can happen, but I'm not saying that that will happen. Okay, so what do? You look for divergences. When the
mhm.
price is going in one direction, and if your indicator is telling that market is going other way, there's a good chance that at some point in time this can actually do something like this. So this is just a study. It is not a confirmation. You do not trade a divergence. It is basically a kind of getting a sense of trend. Maybe possibly the trend is about to change. That's what it is for.
But clearly we can see there is a bearish divergence on the gold now.
Exactly. That's why I'm bearish on gold.
But on what time frame? Because okay, this is a daily chart. But your Vata monthly says it goes up to 2,100 or so.
Exactly. So it can
Daily.
take, yeah. So the way it works is each market, each time frame is fractal, right? So you need to put it in perspective, and this is what like a majority of the traders make mistakes on, right? So weekly is showing me. Let me show you this. So if I go to the weekly time frame or monthly time frame, where is it? Yeah, here. Okay, so this is the weekly time frame target here.
Yeah.
On the weekly time frame, this is still bullish. Everything is bullish, right? So on the weekly time frame, it is bullish, but that does not mean that there cannot be few days where the market cannot fall down. Yes, it can. What if this week is bullish, next week is down, and then it goes up? So what about these few days? You see my point, right?
Yeah.
Right. So on the weekly time frame, it is bullish, and it can reach this. However, for few hours, few days, it can still fall down, right? Because you see, this is what happened. Fell down, but it continued to go up, fell down, continued to go up. So it can still fall down, bearish candle, bearish candle, bearish candle, and then go back up. So for this, what do you do? You know that, okay, on the weekly candle, on the weekly time frame, it can still go up, but that doesn't stop me from taking a trade on daily time frame, because on daily time frame I can see a divergence and I can see a bunch of other things. Okay, I can take this for a few days, it can fall down and then go back up. So for a few days I can make money on this. Okay, for a trader, it's just one thing. You're not accumulating anything. You're looking for a setup, you're entering there, you have a stop loss and you have reward to risk ratio. That's it, right? You're not entering again and again and again trying to collect. No, that will go against you and that will blow up your account, or you will go to high leverage mode. I think that's what happened with you a few times, right? That's one thing. Second thing is, if your weekly is saying that it is going up, so this is my weekly trend, right? What is this? Is it uptrend or downtrend?
It's downtrend.
So I'm trading this. I can short this on a smaller time frame. That's what I'm doing. I know I need to prefer longs, but who's stopping me from taking this? Yes, if it reaches, when it will reach here, this particular point, I will get out of the short and then I will go long. So you can play both sides. It is all about impulses and corrections. So look at this example again. This is the weekly time frame. Okay, now draw impulse, correction, impulse, correction, impulse, correction. We're still forming, right? So week is not over, so we do not know whether it will close above or whatever, right? But that's what it is, right? Now I could have taken this short, right?
I would have stayed away from the position because I know my friend is telling me
no, that is the mistake. You can play both sides. Now if you do not choose to take this, that's fine. That's your that's your choice. Okay, but the problem here is you will try to accumulate in this. You will try to open a lot of long positions here. That is wrong. You see, my point is, you can trade this, you can trade this. That is a counter trend, but it is also very good. Not a problem at all, because counter trend on weekly can be very good trend on daily or 4 hour. Bearish trend. This, look at this. This kept on falling what 1, 2, 3, 4 weeks. 4 weeks. Which means that on 4 hour time frame or daily time frame, this was a very good bearish trend. So why don't you trade this? You can, right? So keeping an eye on, keep your eye on weekly, but trade smaller time frames. That's what I say all the time. Right? So you can trade this. Now, if you do not want to trade this because you think that, yeah, market is bullish, I will only prefer longs, that's fine. That's completely up to you, but nobody is stopping you from taking this. Okay, as long as you have an eye on the weekly, on the higher time frame. But the problem here is, do not let your bias into thinking that this will go long from here. this will go up from here, this will go up from here. So what you will do, if you have taken a long from here, as soon as the market starts to fall against you, you will start accumulating, right? Without knowing where this is going to go. And that adds up to a lot of loss, right? So take one leg at a time. You could have taken a long, fine, no problems. Could have taken this one, fine. So what I'm doing right now is taking short. And why I'm taking the short is not because of the weekly time frame. I know that this weekly time frame is still bullish and there is a water target available, but nobody is stopping me from taking a short for a couple of days. See, it can go up, fall down, and then go back up, and this process from here to here can take weeks, days and weeks. So why don't I capitalize on this move and then this move? So I'll go short here and then I will go long again. You see my point, right? So this is the biggest problem that most of the traders have. They do not think that like, you know, each market has fractal. They have their own impulses and corrections. Right here on the monthly time frame, it can go there. But does it matter? Why? Because you see, the signal actually came here, right? So if you start taking long from here, ideally it should go there, right? And it is going towards that. But do you think it's going to go directly? No. What happened to here? This was a bearish candle. So if you thought of accumulating all the long, you would have lost entire account. Right? So I know that it can go there and it will probably go there, but it will take its own time. This is looking at monthly time frame. So it can take months to do this. You see, from here to here, it has taken already 4 months. It hasn't even reached yet, right? So the signal that you see on that time frame, it can take those many time frames, right? And it can take multiple of those time frames. For example, here, if you're looking at this signal, this is monthly, right? So it can take months to reach that. And this is what I mention always, right? You know, and if you're looking at this signal here, because this is on weekly, it can take weeks. So shall I wait for weeks? No. Look at this on daily time frame. It has reached the 2 targets here. Right. So once, because it has reached to 2 targets, and I can see that, okay, market actually can, like, you know, fall down. So why don't I trade that? I can trade that, right? I do not trade weekly or monthly anyway. So what I'm trading, why I'm in a short position, is because of, very simply, the market can fall down for a few days, right? And then it can go back to weekly or monthly if it wants to.
But still, I'm still trying to understand what is your, like, why is your bias short here?
So you need to, again, think about the time frames that you're trading, right? I know the weekly can go up, monthly can go up, right? But that does not mean that it cannot fall down for a couple of days, or 1 day or 2 days, 1.5 days, right? It can. So I can capitalize on that, okay? So what do I need? I need to find evidence, okay? What is my evidence? Why I want to take a short? Because I cannot be mad, like, you know, taking a short against the trend, right? So there should be a reason. Okay, what are the reasons? The reason is that there is an extended W. That's what I mentioned in public post, and that's what I mentioned yesterday in the Discord room. Okay, it has reached the daily targets. Weekly is still open, monthly is still open, but that may take weeks or months. Okay, but daily is done, right? Okay, so after a W, what do you see? Market falling down. Okay, so if I want to take this short on daily time frame, I will not trade daily time frame, right? This is a setup coming from daily time frame, so I'll have to go to smaller time frames. Okay, so what's the next step? The next step is I will go to 4-hour time frame to see if there is anything else which can actually tell me that it wants to go down. Okay, yes, I can see this 4-hour time frame target has been hit. This has turned red. Okay, which means that market wants to go down. It may not be that easy for it to go down because the trend has been very bullish and everything. So it may take a little longer. Okay, so it will take a long bit time, like, you know, to start building up that momentum. Okay, but I can see confirmations. I can see more factors. Then, okay, where is going to be my profit target? My profit target will come from higher time frame. or the composite leg. So let me go back to higher time frame, 4-hour time frame. I can make use of FCP. So if I draw Fibonacci from here to here, after a W, what happens? An M pattern comes, right? So this is my M pattern. So this will be my target. That's
so
it.
you'll go from here to 2020 or around that area.
Yeah. So I'll get out. I will get out around that, right? Or I'll reassess around that. If the market tells me around that level, okay, I want to go even further down, right? Then I'll leave part of the position open or the entire position open. Otherwise, I'll get out and look for a long. Why long? Because the weekly is up. That's how you look at it. So stay objective. Do not fall into like, yeah, this is, I need to go only. This is what we call as bias blindness, right? If you have just one bias and you will, I need to go long, I need to go long. No, because the market does not go in straight direction. The straight line has ups and downs, ups and downs, and ups and downs, and you are free to trade these ups and downs as well.
Yeah.
Right. So the market is bullish, right? Fine. Okay, let's go to the weekly time frame. On weekly time frame, what do you see? Bullish,
bullish, bullish,
bullish, bullish. Fine. Right. Okay. If that is the case, then in few weeks' time, it can reach this. Right. Okay. Now, is this target same as monthly? Let's find out. So I'll put a horizontal line. Right. Okay. Then put a line on it.
Okay.
I want to see which targets it can reach, right? In weeks and months, right? And go back to monthly. Same as this.
Yeah, it's still a 9, yeah.
Right, which means that monthly target is also pointing to the same area as of weekly, right? So it's a high probability that the market may reach there. Right. This is what I posted on 14th of March. Right? The market can actually go there. That's a probability, right? Okay, fine. So we have done with weekly. So everything is looking bullish. Yeah. So ideally, we should favor long positions.
Yeah.
Right. Okay. Now the point is, where are you going to take your long position? From the high or from a pullback?
Ideally a pullback, because that gives a better risk reward ratio.
Exactly, right? Because you see, it is not going up in a straight line, right? It never does, right? So it goes up, then pulls back, goes up, pulls back, goes up, pulls back, goes up, and then pulls back, right? So if this pulls back, what is a pullback? Pullback is nothing but a correction in our terminology, right? Isn't it? So if this correction comes to a certain level, which we can find based on our analysis, then I will look for a long position, hoping it to reach that weekly or monthly target. Right? Okay. Now, this pullback is where you should not take any long positions. Why? Because if you start taking long positions here, you do not know where this pullback is going to end, right? So how do you find where it is going to end? You'll need to do analysis on smaller time frame to find 61.8 or 78.6 or whatever, right? Find that FCP zone, and from there you should plan for a long. Until then, you should look for a short.
Or stay away from it.
Or stay away from it, right? You look for a short or stay away from it, right? Okay, fine. Now, so I am looking for that short, right? It depends on you, right? Whether you want to do it or not, but I am doing that, right? And this is again, even if only if you want to take the short, okay, right? Now, if I go to the 4-hour time frame, obviously I'm not going to enter on daily time frame. Daily time frame is my higher time frame for me. So from daily, I will come to 4-hour time frame to collect my evidences, right? Whether I want to go short on or not, right? Yes, I can see that color has already changed. So it is already telling me that it is bearish. Even though this candle actually pulled up, this is still bearish.
Okay.
Which means that trend is down now on H4 time frame, right? Okay. So if you want to take this trade, if let's say you were late, right? I took this trade here,
Mm.
okay? But if you are late, what you can do is you can wait for the colors to change. So there are two ways of using the button research, right? For signal generation, aggressive and non-aggressive. Okay, so aggressive one is that first you look for color change here,
Mm.
then you look for color change here. As soon as the candle closes inside water wave, this is wave, and as soon as it closes inside, you open a short position.
Even though the signal is not generated here.
No, that's aggressive. That is why it is called aggressive.
Mm.
If you want to have like non-aggressive approach, then you must wait for that arrow to appear.
Mm.
Right, but by that time the market would have moved already, right? And you'll have like a smaller reward to risk ratio and all that, right? Another way of doing it, don't execute here, go to smaller time frames. Okay, so what can we expect next, right? So for that, let's look at the structure here. Remember, we have just completed a W pattern, and after W pattern the market falls, right? And it did. Inside this, you will notice that we have on smaller time frame we have an M pattern. And because of this M pattern, when M pattern completes, the market goes up, right? So it continues, right? It goes up, down, and that creates these wave kind of structures. Now, as we study in our recipe methodology, that not all of these WNM patterns are tradable. We only focus on the high probability ones, right? There are approximately 164 of them, but we trade only the high probability and high predictability patterns basically. So what we have is right now that market has created this W pattern and it fell down. Now this W pattern can actually give us further downward movement. That is a very good possibility. However, because this M pattern has been completed on smaller time frame, they can be smaller movements like this up and down. And another thing to note is that this market came right into this 2000 price level, which is also a psychological number, very important number for this market. So the market may try to consolidate again like it did here. So there are three possibilities. Obviously, the market can actually consolidate because of 2000 level, or it may try to go slightly above, because of the completion of M pattern. But because the W pattern is complete, there can be a further big M pattern. How do I mean? Right. So this is how it is going to look like. This is an extended M pattern, and the market can actually push down this, to create this. Another thing to note here is that we have a lot of liquidity here. We have been following this liquidity for quite a while now. If you follow my previous analysis or look at the free Telegram group, by the way, Telegram group is completely free to join. You can join there, and you will get my updates whenever they are there. So this there is a lot of liquidity here. Market makers have created this false perception. This they probably have created this false perception that it is going to go up now. So this thing can actually come down to collect liquidity below this. So that is a possibility. So for now, I'm more bearish, although on weekly and monthly time frame, the market is still bullish. Having said that, there is nothing stopping it from being bearish for few days or even for few weeks. Right, it can continue to fall down before rising up. Right, if it goes like that. Market conditions can change at any moment in time. This market is getting very volatile right now. So if you do not have any plan, if you do not know what you are doing, if you do not know how to trade, stay out of this. I always say, if you're in doubt, get out and stay out. So these are the things that I will be watching on smaller time frames. I'll be looking for probably short or small, long trades here. And one of our team members in FCP room, he actually managed to take a long here, which was little risky because it was late on the Friday. But it's completely up to them. It was perfectly all right as per rules, but I would not have taken that personally because it was on Friday, late on Friday, and the market was falling really hard. However, having said that, the market has reached the potential profit targets of this W pattern, and it can continue to fall to have bigger profit targets of this W, and then it can target this liquidity. Once it has targeted the liquidity, then we will have to be extra careful, because after that there can be a chance of it moving higher, because usually that's what happens. It collected the stop loss above this and then fell down. It can collect the stop losses below this and then move up. So you'll have to be careful around these. Okay, if it continues to fall even beyond this, then it is going to form this particular M pattern. Okay, remember, as a trader, you do not need to predict. What you do is basically you create scenarios, you assess scenarios, right? And then let the market play. When the market, if and when market, right, fulfills one of those scenarios, you basically go to the smaller time frames and play those scenarios with your trading plan. That's what it is, right? You do not have to predict that the market is going to go to 2400 or whatever, right? As an investor, probably that's what you would like to do, right? As a long-term trader, you probably would like to do, but most of us are not like that. Most of us are short-term traders, they are scalpers, they are swing traders, short-term swing traders, position holders even, right? For them, scenarios they must assess both bullish and bearish scenarios and create a trading plan and execute that trading plan when the market comes to those important levels. So these are the scenarios. Now let's look at some of the levels. So if I open the previous analysis, there are few levels that you should be monitoring, right? One is that on my feed, remember, the feeds on TradingView can be different because they're coming from different brokers. So make sure that you're looking at the right feed. I'm always using this particular feed for my analysis, right? Just for the consistency sake. But whatever feed that you choose, just stay with that. Here, what I can see, that market came to this trend line, which I posted in Telegram group as well. We have this very important level, which is 2072. Market can actually come there. Okay, so beware of that. And if the market continues to go up, then we have 2104 level, approximately that level, and that is also given by weekly water target. So that is possible. And beyond that, we have 2129, right? These are all the bullish scenarios, bullish levels, bullish targets, or you can say higher time frame resistances, right? Okay, right now this is jumping from 2000. As I said, this can be an area for consolidation, because the market may try to spend some time going up and down around this. This is the liquidity area. Okay, there are a lot of stop losses below this, especially after looking at this move. And this is the trend line. Right, this is a retail trader trend line. Market makers can actually push this price down, and if it starts to happen, then we have 1954 as an important level, and then it can fall down to 1926 as well. Between this, we have 1964 as one of the I believe there is a very good gap available around 1964 as well. So let me put another intermediate line in there just to give you these important levels. By the way, these are higher time frame levels. So if you're doing scalping or short-term trading, you can do this around these levels. But if you are looking for very fine-tuned levels on half-hour time frame or 5 minutes time frame, then those are not present on this particular chart. Okay, for that you'll have to do further analysis on smaller time frame. So this is how it is looking. Approximately here, it can fall down if it continues to do that. If it continues to go up, a scenario will be all of these will act as resistance or profit targets, and downward levels are there. So these are supports and these are resistances. Now, if I go to a smaller time frame, such as 4 hour, so the market came down and pushed up, right? And this is happening because of two reasons. One is that the market created this M pattern. After a W, there is an M pattern, and after this M pattern, we also had this 2000 level, so the market pushed up. Now it may get stuck here for some time between these levels, right? The market may actually get stuck here, pretty much like how it did, and I did mention this last time in the previous analysis. Yeah, it may get stuck, and then there can be a breakout. If you look at the previous messages on Telegram, this is where I expected market to break out, right? Because the market was very squeezed. Let me show you where. So the market was getting squeezed in this particular triangle here. So when the market was reaching towards the apex of this triangle, I posted this message saying that there could be a breakout coming soon, right? Now the market went higher, collected the stop loss above, and then started to fall down. Now it can consolidate again before deciding where it wants to go. Now if it starts to go up, you have all these levels as your profit targets or resistances, and if it starts to go below this line, below this trend line, you have this liquidity. So you'll have to be careful around 1979 and 1966. As I said, after stop loss collection, they can move up. 1954 is yellow line. This is very important, pretty much like 1806 if you remember. And then we have 1926, and below that we have another FCP zone which is already there, approximately around 1906. So these are all the levels which are there. And by the way, this is not the premium analysis. If you want premium analysis, you can contact us directly, and that will have even better analysis and better fine-tuned levels, right? So good luck with the trading next week. Hope you enjoyed this particular analysis. There was a lot of educational content in there, a lot of learning in there. So if you haven't actually if you have skipped some of skipped over some of that, I will strongly recommend you to go back and watch this video very slowly in steps several times. It will probably help you a lot, right? Even if you're not trading gold, right? In general terms, right? How to understand the market structure, how you create your trading plan, how to control your psychology and all that, right? There's a lot of learning here. So hope you enjoyed this. If you found this useful, then make sure that you hit the like button, subscribe to the channel, put in a comment, let me know, right? Your feedback, and share it with other traders and trading communities, because they will also be able to take benefit out of this. And I'll see you in the next one. Have a great trading week. Thank you for watching. Find and follow us on these social media channels.